Good morning. It is Tuesday, February 18th, 2025. It's just before 11 a.m. on the East Coast, and this is Rob Sin at CO Technician on X, at Goldfinger on CO.ca, and this is Goldfinger Capital on YouTube. And it's a pleasure to be back making a video after the long weekend. It was Family Day in Canada, Veterans Day in the US, and as always, there's a lot to talk about. I'm really actually trying to make this one a bit more concise than my usual ones. I feel like there'll be more opportunities to speak about other topics later in the week. And there's so much in flux right now with whatever is going on in Saudi Arabia, in Ukraine, Russia, Germany. There's a lot. There's a fire hose of information on a daily basis. So instead of trying to dissect all of that, let's just get to the salient points and topics that I actually might have some insights on, as opposed to topics I don't have insights on, like whatever's going to happen in Saudi Arabia between the US and Russia and Ukraine. So let's get into it. Gold is obviously a big topic. That'll be the main topic of this video. But let's start with a little bit of the macro. So retail sales miss on Friday was a pretty big miss. It's pretty poor data. National Association of Home Builders numbers, they put out a monthly housing health data point, essentially, was also a big miss. And that was after some improvement in housing at the end of 2024. So we're like right back down to the August lows in housing. So there's mounting evidence that the economy is decelerating a bit. Let's not sound a red light siren that we're in a recession. No, I don't think that, but there's definitely some evidence of deceleration here at the beginning of 2025. Changing of the administration in Washington certainly probably has something to do with that. A lot of businesses might be on hold to get some more clarity as to Trump 2.0 policies. And then whatever's going on with tariffs, right? I think that definitely is a big question mark for a lot of businesses. And so, yeah, we're starting to see it. We're starting to see it in the data. And also the Fed is on hold, right? So the Fed is unclear as to the policy, tariff policy and other policies. And it takes a few months. It takes at least 3 months for the new administration to really get its bearing and start to put its policies in place, and then to also start to pass bills through Congress, or try to get bills passed through Congress, right? So we're in this period of high uncertainty, right? And so I think that has the Fed on hold. The market's saying the Fed is on hold at least until June, right? That's pretty big. So if the data across the economy continues to weaken throughout February and into March, with the Fed staying on hold for at least another few months, that's going to create a potential bit of an air pocket for stocks. And meanwhile, with the S&P, we're at all-time highs. We're basically just pulling back off an all-time high here this morning. So it's an interesting situation, and I wrote over the weekend that I've turned a little more pessimistic, and I cited the retail sales data as one of the points that often we see a stagnation in real retail sales before a recession. We saw it in 2001, 2002. We saw it in 2007, 2008, and we're seeing it right now. Now, what does the economy do? Is this different this time? Right? That's a question that we need to ask. But definitely, it seems to me that the risk is elevated here in stocks. And, I could go deeper into the technical bifurcation across the market, small caps not participating, et cetera, et cetera. You can make a case bullish or bearish both ways, on the technical side. But the simple point is, if the economy continues to show signs of weakening and the Fed stays on hold because the inflation data continues to be above their target levels, their target range, then that creates a tough situation for all-time highs for stocks and frothy valuations. I mean, stocks are priced for perfection right now. And even like the bullish outlook for various firms is like, maybe the S&P can go to 6,400 this year. Well, we're already at 6,150, so another 250, that's 4%. So that's like the bull case. So why are you going to take the risk of 10%, 15% downside to try to get 4% upside, right? So that's just some of my big picture thoughts. I'm not taking a aggressively short view. I'm not even net short right now, but I'm starting to lean that way. I haven't acted yet because I feel like I need to see more evidence. So the gold revaluation talk. So I posted this on my Substack last week. Got quite a bit of attention. It was linked by several major sites. And it's an interesting topic because there's so much influx here too. There's so much that's unknown. An excellent article by Vince Lancy, also delved into this topic. I suggest that you read this on the Scottsdale Mint. This was published, yesterday on Monday, and he delves into it and also just how uncertain this is and how it might work. Like how does this actually work? If Trump really wants to, reset the gold price from $42 an ounce, which is what it's been marked at on the Treasury balance sheet for 50 years. If they want to remarket to 2,800 or even a higher price, how does that work? And it seems like nobody actually knows, but the Treasury and the Fed have to work together on this because the Fed is the one that gives the Treasury the money. The Treasury is the one that's doing the accounting and the marking. How that works, and can the president do that? Does the Treasury Secretary do that? I've read conflicting opinions on that, but it seems that for the whole operation to actually work and for the Treasury to get an injection of whatever, 750 or 800 billion of fresh dollars, into its general account that it can use for whatever, to pay down debt or carry out new budget items of the government, et cetera, et cetera. The Fed has to work with the Treasury. So if the Fed chair and the Treasury Secretary don't agree on this, then that's a problem, right? And the Fed is supposedly independent, right? So the president and the Treasury Secretary cannot order the Fed to do something that it doesn't want to do. So that creates a very interesting situation. But just judging by the price action and judging by the number of analysts out there. So Bank of America's talking about this now. Goldman's talking about this now. A lot of firms are talking about this now. The Financial Times commented on it, right? It's on social media, right? They're talking about auditing Fort Knox gold reserves. So the fact that Musk is now got a hair up his butt to audit the Fort Knox gold reserves, clearly the gold conversation is real. There's something happening here. We just don't know what it is exactly and what it looks like. The price action is also the strongest, piece of evidence we have. The price action, the market action, the strong buying interest that is continuing week after week. Well, that is telling us that something is definitely happening. And when I was talking about what China might do with its gold and how China might play gold as a trump card back in January, I was thinking about like what price is this going to bring gold to? And the number I kept coming up with was like 3,300. It just kind of makes sense. 20,000 won, or the CNY per ounce, and then the CNY gets revalued to 6-1 to the dollar, right? And you get a price of like 33.30 or something, right? So I kept coming up ballpark 3,300 an ounce, and it remains to be seen what China is actually going to do. I think China might be waiting for the U.S. to play its hand first, but somewhere in this 2,800 to 3,300 range is probably what we're talking about. So I think gold has reached sort of this target range, but where it's actually going to end up here in 2025 is unclear. And I think the policymakers are also unclear. And that's why there's some volatility. Like gold dropped on Friday. Like, why did gold drop $70 an ounce from 29.60 to 28.90? Well, who knows? Like, maybe there was some conversation going on in some back room and the plan changed a little bit. Then they thought about it over the week. You just don't know what is going on here, right? There's so much in flux. But the one thing we do know is the trend. We can see this moving average is very clearly rising from the lower left to the upper right. And clearly there is something going on here. All these politicians, Musk, Treasury Secretary, clearly has an affinity for gold, and gold is playing a part in whatever the Treasury is about to do with the asset side of the government's balance sheet, right? And the asset side of the government's balance sheet, that's such a vague statement. Well, what does that mean? The asset side includes land, property, plant, and equipment. It includes Freddie, Fannie, Sally Mae, right? These government extensions of the government, essentially, that lend money to people to buy houses or get student loans, right? So these government, basically financial, entities, right? Like, is that part of the asset side, and how does that get monetized, right? There's so much uncertainty. But clearly something is happening with the gold. Something is. It doesn't make sense in 2025 for the Treasury of the U.S. government to continue to mark 8,133 tons of gold at $42 an ounce when the market price is 2,900. It just doesn't make sense. So something's happening. We just don't know what it looks like exactly. But the fact that now Goldman raises its price target on gold to 3,100 by the end of 2025, 3,300 in 2026, with a potential bullish case that would have gold reach 3,300 by the end of 2025. And you see their little chart showing their new forecast as opposed to their prior forecast. And why is this? Well, tariff fears persist. It doesn't look like that is being clarified at any time soon, right? There's still a lot of uncertainty with what happens with Canada, with what happens with Mexico, with what happens with China. That's obviously a big area of uncertainty, but the central bank buying is the main driver here, right? And with all the uncertainty about the role that the U.S. will play in NATO going forward, or the fact that the U.S. may withdraw its troops from the Baltics or other countries in Europe, right? So now the fact is that Europe and other countries that have counted on the U.S. for so much for so long, well, now they have the prospect of fending for themselves, right? And this could also help accelerate the process of de-dollarization, although that's not a huge topic right now. I don't think that went anywhere, quite frankly, and gold is a big part of that process of de-dollarization that has been going on for many years now, right? And then so the central bank buying, and it's kind of interesting that they say that if the central bank purchases, the official central bank purchases average 70 tons per month in 2025, the gold price could reach 3,200, right? And then obviously if the Fed is cutting interest rates and there's monetary policy stimulus on top of that obviously could go higher. But if the Fed just keeps the Fed funds rate flat in 2025, so if they hold at 4.5%, which seems unlikely in my opinion, but if they do, and that would be pretty hawkish, that would consider to be gold negative normally, they would still expect the gold price to reach $3,060 an ounce by the end of 2025. So even in a hawkish Fed outcome in 2025, gold is still rising another $150 an ounce. It's very interesting, right? It's a very bullish note from Goldman. And Jan Gold on X, he's excellent. I think he's the best in terms of following what's going on with China and its stealth gold buying. Well, he estimates that the People's Bank of China in 2024 secretly bought approximately 600 tons of gold, basically $50 billion exchanged for 600 tons of gold. And now it's above their official gold purchases, which I think were something like 400 tons or maybe even more. But add it all up, that's 1,000 tons of gold bought in a year, and assume that they may have done that in 2022 and 2023 as well. And you can imagine that China has a lot more gold than they officially state, right? And he has this graphic showing that the UK is selling and shipping a lot of gold to China, right? And it's above and beyond the officially stated purchases by the PBoC. So we have whatever is happening in the US with the potential revaluation and tariffs, and the fact that there's a lot of gold being flown into the US that's being repatriated or being patriated to the US. Then we have China with their continued appetite for gold accumulation, right? And the gold is being vacuumed up, right? It's being vacuumed up by the East, but now it's also being vacuumed up by the US, right? So yeah. No, they just technically speaking, 29.65, 29.68, that was the level that gold peaked at last week. It looks like it wants to retest that. We're not quite there yet, but it'll be really interesting to see if it retests it. Because if it retests it and it punches through that 29.6850 high from last Monday, well, then the next level is going to be that $3,000 round number. And I expect that if there is a test of the 3,000 round number, that's going to get huge headlines. You're going to get a lot of media attention, and maybe even it will push through that, cause some short covering, some forced short covering. But then I would also anticipate, be careful there, because that's the kind of like emotion, drama in the market that usually coincides or culminates in sort of a blow off top and a short term or even a medium term peak for the market. So gold is getting more volatile here as we get closer to 3,000. It's getting more dangerous to trade. I would, if you are trading it, definitely widen out your stops and your price targets and cut your position size down quite a bit, because this is going to get pretty wild, especially if we do punch through that 3,000. Okay, so be careful there, and also seasonality. It's not favorable here for the next month or so. So it's got the makings of a little bit of a shakeout, smackdown, right? I'm not saying I'm bearish. I'm just saying be cautious, and maybe trading both sides of the market is more prudent than just being on one side of the market. After such a big run that we've had, just a month and a half here into 2025, and there's that bearish engulfing candlestick that happened on Friday. So that's a bearish technical sign, but it's one candlestick. It's one candlestick, and one candlestick by itself is not enough. But if we put in the context of this is a big uptrend, it's pretty extended to the upside, and then the candlestick that we saw there on Tuesday, sort of a spinning top there on the day that it made the high at 29.6850, we have some of the makings of a potentially bearish candlestick pattern that could be a short-term top in the market. Okay, so just want to be aware of that. Treasury yields, it seems like we're in the 10-year likes 4.5%. That seems to be the level. If the Fed funds rate is 4.5%, The 10-year is fine at being 4.5%. So we have a flat yield curve. Very interesting. And then obviously the dollar, right? So there's been a lot of signals from the administration that they want a weaker dollar, right? And so this tariff top that happened a few weeks ago at the beginning of the month, that looks like a very significant dollar peak, right? And so that would also be another potential tailwind for metals and potentially even for mining stocks if the dollar continues to trend lower here. And that is proven to be a major peak for the dollar. Miners, I don't really have a lot to say about this. There's a post on my Substack about AEM, the best senior gold producer, and just some speculation about how there could be some synergy between Kinross and Agnico. Who knows? And then the final topic, Ridgeline Minerals. So those of you who have been following me, who read my content, know I've been covering RDG for over 2 years now. I think it's been since 2022. And just recently, the company closed the financing. It's actually literally at the end of last week. They closed a $4.1 million financing, and they're getting ready to drill their big blue copper gold porphyry project literally in like 2 weeks. So I think the drill will arrive and the program will get started there the first week of March. So they're moving quickly. They're being aggressive. No time to waste. Chad Peters, the CEO, really likes this big blue target, right? And I'm just going to pull this up. So here's the financing close. Here's that news release. And then, yeah, this is the news release from January 21st. So I'm not going to go into all of this. You can watch his video. Very good 5-minute clip. He explains it quite well, but you can read this. You can delve into this, all the figures, great graphics in this, and basically lays out what they found at Big Blue since they staked this project in 2023, why it's such a compelling drill target for the company, why they're so excited about it, that they're going right into the drill program as soon as they've closed this financing. And maybe you can't see this too well, but I sort of just did some drill traces here in blue of potentially 2 of the holes, basically a rough outline of how 2 of the holes in this drill program will look. They might drill 3 holes. They could even drill 4 holes. Obviously, if the drill program is going well, it can be expanded. But it seems like 2,000 meters and 3 drill holes is sort of the expectations at this point in time. But obviously, that can change due to a number of reasons. But the stock really started to move up at the end of last week as it became clear the financing was going to close and drilling was only a few weeks away, right? And we see this often where, company has had a financing overhang, tax loss season at the end of last year, share price got dragged down to 13 cents there at the low in November. And so it's just been sort of held down. And now the financing overhang is done. They've closed it now. And the anticipation of drilling creates some speculation in the market, some excitement, and some buying pressure that just wasn't there at the end of last year or even early in January when the financing was still the overhang on the share price, right? So now that's lifted. The drilling excitement is here, and it will continue to build for the next several weeks. Needless to say, I'm extremely bullish on Ridgeline, on RDG. I'm a shareholder, so you can consider me biased. And me making this video and talking about it, I don't want to make this sound like I'm encouraging people to go out. You have to buy it right now. In fact, if you've been following me, hopefully you own it already. And frankly, it was a lot better buy at 14 cents in January or 15 cents in January than it is at 22 cents right now. But that being said, if we zoom this chart out, let's pull it out to like a 3-year weekly chart. You can see that RDG has built a pretty nice base for the last couple of years, and it's just trying to break out of this consolidation that it had for basically all of 2024. So technically, this is encouraging, right? The chart is encouraging. Dare I say the volume last week is actually bullish, right? But obviously we know that in junior mining, everything is going to come down to the drill program, the drill results. Big Blue is obviously super important for the company. That's where they're putting most of their dollars here in early 2025. But what's also important to really understand about RDG and why this closed-end fund invested $1.35 million. This is a $540 million fund that cut a $1.35 million check in this financing that just closed, right? So what do they see? That's a good question to ask yourself. This is a big fund. Here's their chart. They're doing pretty well. They're looking very much like the gold price. But this is from Matt Geiger of MJG Capital. He outlines why he's bullish on RDG, and it's not just a one-trick pony, right? 7 projects across the best gold mining state in the U.S. You can see catalyst. These are all potential catalysts. The drill program at Swift, the drill program at Atlas, South 32, Black Ridge. And Big Blue is obviously the main event, but at each of these projects, there is the potential torque of one new discovery hole can be a company maker for Ridgeline, right? And so that's really the summary of why I'm bullish on it and why I really like it here. But again, as soon as I say that, don't buy it right now, right? It just had a big run up. So all the people who got in the 15-cent financing are up like 40% in 3 days, right? So if you don't own it already, just watch it, right? Watch it. Patience is a virtue. You never know what opportunities might come about in this crazy junior mining sector, right? So anyway, and I'll be having a conversation with Chad in the next week or so. We'll delve into the Big Blue drill program and maybe some of the other projects as well. Thanks for tuning in. And again, as always, if you find value in this video, please hit the like button, subscribe to Goldfinger Capital on YouTube and Substack, and have a powerful trading week.